for watching. I'm working more today on my stock market tool. My initial plan was to start paper trading this morning in about 3.5 hours. However, that might not be implementable. But I just ran a model to look into the problem I'm having, and it looks a lot better. So I might be able. Basically, I'm doing this stream to see, can I get at least a single model going, which I'm happy with. So let me go over the goals for the project real quick. What I'm doing, then I'm going to go over what I've done recently and where I'm at. And then I'll start diving into this problem. So I work on this every day. Of course, if you're interested in this, subscribe, because I'm slowly marching towards a model that I'll be able to implement. So my goal is keep hitting my head against the wall, and one day an effective model will pop out. So here are my goals. My first goal: beat the S&P 500 by a significant margin while staying market neutral. So the S&P goes up on average 6% per year. I want to do 3 to 4 times better than that and get 18 to 24% per year. At the same time, the strategy should be market neutral. So it should be working regardless of if we're in a bull market or a bear market. This should give reliable returns. So that's the first thing. Now, the second thing is I'm writing all this code in Python, so I'm generalizing it so that anyone can make these sorts of models for themselves. So if you're interested in that, check out the GitHub link, which is in the description. And yeah, download it, try it out, fork it, let me know how it works. Let me know how I can improve it or what features you'd like to see added. And of course, if you find it helpful, please star the repository, watch the repository, and follow me on GitHub. So this is, at the bottom, is the outline of the model. First, I'm isolating a stock universe because you don't want to train the model on everything that's available. So you only want it to train on things that are similar and high volume so that it's scalable. Similar so the model works well. Once I have a stock universe, I found one which seems to work pretty well. I'm using that to train the returns model. This model is predicting something like returns relative to the market, relative to sector, something like that. I'm using the Sharpe ratio over the next 5 days. I've got a good model on that. I'll talk about that in a second. And the final step, once I have a good returns model, is to implement a portfolio strategy on that. Basically, take the output of the returns model and decide how to allocate capital accordingly. So, hey, Moonlight, how are you? So I've done all of these, but now I'm having a problem. So I'll talk about that problem in a sec. First, let me talk about the model and why I'm confident that it's a good model. So this is the model I got a little over a month ago that I've been working with. Most of the time since then, I've tuned it up and improved it a little bit. But this is the base model that I thought was really good. So why do I think this is good? So this is for a single model trained from 2011 through 2019, validated. The hyperparameters of the model are tuned 2019 through 2022, and then it's tested from mid-23 through the end of 2025. So if you look at the metrics I'm looking at are in the red box, and without going through all of them, I'm matching or outperforming my goals for each metric. In fact, there's only one metric which I'm not beating my goals by a significant margin, but even then I have a range I'm looking for, and I'm at the lower end of the range, and for that metric, the lower the better. So the metrics look all really good. Now, that's not enough, but it's the first indicator. So not only do the metrics look good, but the decile analysis looks really good. This is the hallmark of a good decile analysis. And for that, we want something where the lowest decile, the bottom 10%, is the worst performing. The top decile, 90% and above, is the best performing. And in between, each decile is higher than the previous decile. This means it's monotonically increasing. So that's exactly the behavior we see here. So it looks good on the metrics. It looks good on the decile analysis. Now, this is for a single model. If I trained a new model every year from 2016 through 2025, you see that the metrics I'm looking at, it's above the threshold for each year. So that looks good as well. So for those reasons, I'm really confident this is a good model. Now, when I tried to implement a portfolio strategy on this model, it was really easy for the single model that was testing region as this model. So it was doing well on later times, but poorly on early times. Similarly, I looked at what if I optimized for early times, the beginning of 2016 to the middle of 2018. It seems like I might be having an internet problem. Uh-oh. It says my encoder's not connected. Oh, okay, it's back. All right, sorry. If I optimized from the beginning of 2016 through the middle of 2018, it did really well during that time range, but failed afterwards. So if it does well on early times, it does poorly on later times. If it does well at later times, it does poorly on early times. So this is not a good problem to be having. So I looked at the model to see if I could improve it at all. I tried using the same model I just showed, but dropping out all features which had a coefficient of variation above 1 and a mean importance below 5% in the walk forward model. So this is the results that left when I dropped those features out. The decile analyses clearly look better. Um, the portfolio strategy also looks better, and it does well from 2016 through 2020. Then it fails during COVID and does really well after. So this is a much better problem to be having. Basically, I just need to get something which does well during COVID. I got another model. I looked at these two models, the one at the top and the one at the bottom. The one at the top was better, the one at the bottom was worse, so I'm going ahead with this one at the top. Um, and I tweaked around the portfolio strategy some more. Um, if I'm using only some very simple volatility scaling, not scaling by drawdown, I got a really good portfolio strategy. So I looked into other things I could change. I couldn't find any clear patterns here. This is the result of the above two slides. There's no patterns that clearly show anything's better, so I didn't include anything there. And basically, I was just trying a lot of different things. Nothing was really working. I found yesterday, or this would be 2 days ago now, something that was working. So I found I was implementing the portfolio strategy to buy at the market close and then sell at market close in the next 5 days. But that's not what the model was trained on. The model was actually trained on open to open predictions. So this is with close to close. You see the max drawdown is about 25%, and the drawdown duration is about 300 days. So when I changed it to be open to open, the max drawdown dropped to only about 18%. And really, that was only during COVID, and it recovered right after. And the max drawdown duration was 164 days. So open to open is a lot better. And then, I decided based on this that I was ready to implement a portfolio strategy and start paper trading this morning. Um, so I have to get my models for doing that. I have to get models and portfolio strategies for doing that. But when I look at the model here, obviously that looks really bad. This is when I validated up through 2020. The end of 2025, and then I'm testing during 2026. Now there is a data embargo, so when I'm testing during 2026, I'm trying to use all data. It's actually only testing from the middle of February through the end of April. So this is the time where this is for, and it did really bad during this time. So rather than using this, makes it so that it actually starts testing on February 14th, 2026. So I only have a month and a half of data that this decile analysis was from. When I changed it so that it's the testing starts in on November 15th, 2025. The actual test because of the embargo, the actual test starts on January 1st. So and my encoder disconnected again. I don't know. I'm worried the live stream's gonna end because I've been having internet issues. Oh, and I'm back. All right, it says the stream is healthy. So yeah, look here now. This is when now it's testing on all of 2026, and this actually doesn't look bad. So yeah, I have to figure that out. But let's see how a portfolio strategy would do here. And then I also want to see how the previous portfolio strategy, if I extend the data to 2026 and use the model from 2025, how does that do on this? How does the portfolio strategy look? So if I try to get a model 25, 2026, that's the one that's on, right? Yep. And it's saving as model 25, 2026. Okay, so it keeps saying my encoder's disconnected, and it says no data. Yeah, I don't know why. Let me know in the comments if you're watching. Let me know if the stream is buffering. Is the stream buffering? Because it keeps leaving and then coming back. Okay, so let me get that portfolio. Okay, so now we're going to get that portfolio and we can test a portfolio strategy on it. Maybe it just failed from 2015, or maybe it just failed during the Iran war. How did it do during... Yeah, it did well during tariffs. It's good. Yeah, okay, I guess it's just an error on my end. Because it keeps telling me that it stopped receiving data, but I'll just ignore it if it's not giving an issue. Okay, so, um, so these are tested from 213 to 430. Oh no, did I not save that? Oh, dang it. Previous walk forward portfolio with... Well, I guess it's running that again, so actually I'll just run it again so I can get the decile analysis. So my hope is that I can implement this starting this morning. So let's see. So, okay, first step, let's see. I'm going to write down some to-dos. Okay, so the first step. Okay, so we need this guy to finish. Now, why is it going so slow? Hey, buddy. I guess there's just a lot of training data. Because in the walk forward, there's less training data. Okay, so that's going to take a while. So, document portfolio strategies in 2026. So basically, I want to see, does this hold? We could do a month by month. Walk forward. So what if I just do a walk forward analysis, yeah, through 2026? So we go here to test model 25. Min train months 30, val month 6. Data slash models slash model 25. Walk forward. 6 months. So min train months we can decrease by 6 months, right? And that will offset everything by 6 months. So, validation month 6. One year validation. Maybe it needs to be trained more recently. Because it seems like, yeah, the walk forward is going to do... It's going to do that no matter what. So what if I could also look at... So month by month walk forward, that might be hard to do. But I could also look at... What if I train test 2026 trained by month? Okay. 2026 performance. Okay. So I'm training a new model for each month, but the data embargo... Maybe I could just use the last year of data. (2026 performance with monthly models. So, let's say trained validated tested. So we need January, March, January, February, March, April. 4 months. Hey, Shashan. How are you? Okay, so January, February, March, April. And then I need to see... Let's see, for years it would have done really well. So say 2024. Okay, so test 2026 trained by month. We can say if data looks good, we just need recent training. Okay, so test trained by month. If it looks good, we just need recent training. If data still looks bad, look at 2024 by month. Okay, and then the conclusion here, 2024 did quite well. So if some monthly deciles are bad, we're fine. Okay, so then we could look at monthly models from 24. Monthly decile analysis. Life worth fighting for. Oh, I. Okay, this guy should be about to finish. So let's see the decile analysis. Here's the feature plot. What? That looks really good. paper trading models, so that should save. Model 25, 2026. Okay, good. Quick look at the dates. Yeah, testing end of 2025. Oops. So this would have done well early on, but poorly later on. Let me know if you guys have any music recommendations. I remember when I lost my mind. Yeah, nothing good. I just knew too much. That make me crazy. Okay, so now the decile analysis looks really good. So, another thing is how does decile analysis change each time I train? Okay, so now I want to put in this function so I can look at the decile analyses. All right, so let's make a new function. If get 2024 deciles is equal to true, okay, so we've got that portfolio. Now let's do get walk forward portfolios, test get portfolio, save as model 25 2026, HRP model 25. Censor that one out, save it. Let's make sure these are all the standard values. False, 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 false. Okay, this looks good, so let's run this. Okay, still doesn't look very good. But when was the drawdown? When was this? So end of February. It struggled when the war broke out. But by March 6th, it basically flatlined. Then it did well after. I don't know. This might be able to be implemented. Let's think. Can we implement this? Really, I need to see how did it do on... Hey, Hike. What HRP graph could show us? You mean you want to see an HRP graph? I don't have any plotting done with HRP. I just implemented the logic, but I don't have any plots that show the HRP. But the HRP is just a minor part of the modeling that I'm using. So will the decile analysis not work properly unless I specify the target? Shouldn't the decile analysis use returns regardless of target? What are main features of a model? I'm not sure what you mean. The main features that I'm using is a walk forward or a light gradient boosting method to train to predict some sort of return metric on the stock market. Returns relative to average, probability of a positive return, returns relative to sector, Sharpe ratio, stuff like that. And then the portfolio strategy is taking the output of the returns model and deciding how to allocate capital. Let me tell one, would you try my one? What do you mean? Try your model? I'd try your model, of course. What's your setting? Horizon 1, what even is that? No overlap artifacts, Horizon 5. Okay. Let me look at Discord. I need some more coffee. I'm currently developing a bot that does something similar. It is already working with my capital. Let me know if you're interested in a conversation when you have time and space. Yeah, definitely. Private message me on Discord. I put a link to a Discord server in the description. So go click on that and you could find me there. Message me there. Okay, so let's put this decile analysis function in to portfolio. Request me access. There are some fix you need to perform for a data. Okay. Let's finish formatting these. Okay, so that's for a walk forward portfolio. So for just a portfolio. Yeah, and I work on this every day, so don't forget to subscribe if you're interested. Okay, so let's save that. Let's get out of here and reinstall everything to make sure it works. Okay, Hike, I'm gonna look into that after the stream. It'll take up too much of the stream to think about it here. And I'm hoping, if I look at so basically the problem I was having is I said, oh, whoa, if I train a single model, the decile analysis looks really bad. Based on this, I can't start paper trading this morning. However, this was only from the middle of February through April of 2026 when it looks bad. When I changed it so the test data is on the whole region, it actually looks good during 2026. If it's using data from the beginning of 2026 through current. So now when I implemented the portfolio strategy I've been using on that, it does do really poorly when the war breaks out. But then it basically flatlines and then it does well after. It has a nice recovery, during April. So the question is this something I can implement? So the problem being there's like a month and a half where the decile analysis looks really bad. So I'm going to look for 2024 from a previous model for a year where it looked really good and try to see, okay, if I plot the month by month decile analysis, do they all look really good, or are there some months where it looks bad? And if it does look bad, then really I should scale down the exposure based on that. But I don't have that right now. So I'm going to look at 2026 performance by month, and then 2024 from model 25 walk forward performance by month. Because if it is failing some months in 2024, then I will go ahead with the model. But I would have had the worst drawdown since 2020 during the Iran war. However, the Iran war again is kind of a unique circumstance, so maybe that's not too much of an issue. And I did have 15% returns in April, so that looks really good. That part looks really good. And then I also want to look at that's good. Somehow we get some idea like how and what's going on. Yeah. I'll message you after the stream, or maybe I might go to bed after the stream and then message you later in the day. Model 25 walk forward portfolio. Strategy evaluated through May 2026. So I'm also going to get the walk forward and say, how's it look if I evaluate it through May? Okay, so I added in those decile analysis strategies. So let's do get decile analyses. So each model has how much different things we have with a walk forward, train and testing, and a split is 80-20 is a good train test split, but you also have or at least I'm using validation data too, so you have to split with the validation data as well. Validation data is used to Basically make training more efficient and tune the hyperparameters of the model. Have you done any analysis on how much your strategy correlates with an index like the S&P 500? No, I haven't done any analysis, but it's a long-short strategy, and so it should be uncorrelated with the S&P 500. And I'm using beta neutral scaling, so I'm taking the betas of the longs and the betas of the shorts and adjusting the positioning so the net beta should be 0. So from first principles, it's uncorrelated with the S&P, but I haven't documented the correlation with the S&P at all. I'll be waiting to discuss with you till gonna work on a client work. Okay, sounds good. Yeah. Okay. So, let's look at these decile analyses. So portfolio.open, model 25, walk forward. Okay, so now we have the portfolio. So month start should be 2025 2024 2024 -01. Now let's see. So we do have a start date and an end date. So month starts. I guess I could say just 2024 dash month dash 01 4 month in months, and then I can just say months is equal to 01 02 03 04 05 06 06 07 08. What about 2015 Hexor? Or 2014? 09, 10, 11, and 12. For month in months. Yeah, so that should work. And then month ends. Is equal to same thing. For month in months of 1 till. And then month ends dot append. So we need one more. So we'll add 2025-01-01. And then we'll say for start end in zip month starts month ends portfolio dot what decile analysis. Start date, end date, horizon should always be 5. Include gap should be true. Price column equals open. Okay, so all I have to specify is start date, end date, horizon. Portfolio dot decile analysis. Start date is equal to, no, all good. I was just seeing a mismatch and backseat coding. You fixed it though. Oh yeah, I put 2014 instead of 2024. I'm assuming. Start date equals start. End date. End date equals end. Horizon is equal to 5. So let's do get 2024 deciles. Turn that guy off. Turn this guy on. Portfolio Explorer. And let's see how 2014 looks. Expected an indented block on line 157. Portfolio line 160. Oh, I need to indent this. Whoa. Oh, okay. It changed how the decile analysis looks good, but that's actually a pretty nice plot. Okay, so this is going to give me every decile in 2024. So 2024 for model 25. Walk forward performance by month. So we need 12 months. Let's see. Maybe I'll just divide it into thirds. I'll just divide it into halves. Yeah, so it's not perfect every month. So January, February, March, yeah, these do need to be smaller. April, pretty bad. But I don't know, pretty bad, but still, the bottom decile gave the lowest, bottom decile in cumulative return looks the lowest. It just cuts above here. Okay, so now we're in May. So January, February, March, April, May, yep. June. July. August. And it seems I'm missing one. So let's look at this. So we have December. Oh, I didn't get November. Okay, so let's go back to here and then let's plot the decile analysis for the whole year. So let's say portfolio dot decile analysis, start date 2024-01-01, end date is equal to 2025-01-01, and horizon is equal to 5. No, it's fine. Okay, let's think. So now I'm looking at 2024. Model 25. Okay, so redo the portfolio strategy. Redo the model performance. But I need to see, is there a problem with the decile analysis? This doesn't really look so bad. We had a drawdown basically when the war started. It flatlined throughout March and then recovered in April. So this looks like maybe it could be implemented. Now let's see. Let's say horizon equals 20. So if we make the horizon to 1 month, does the signal carry? Does not hold for a month. Hey, point. What information are you getting from your decile analysis? Is a measure of predicted slash realized performance. Yeah. Uh, basically, um, it's these decile analyses are showing basically if you divide the prediction up into deciles, how does each decile perform predicting that quantity. So this is on predicting the Sharpe ratio. These decile analyses are from going long short on the strategy. So what months is it positive? January positive, kind of noisy here in February, positive in March, positive then negative in April, positive in May, nothing to be concluded here, positive. So 1 0 1 2 1 0 1 0 1 2 1 0 minus 1. Yeah. So it's not even better half the time. Okay, so that's okay, so let's think about this. We're not comparing apples to apples really. Um is return column specified? No. Get model 2025. Alright, so let's say here, turn this guy off, then get model 25 2026 underscore deciles is equal to 1. Now, if that's equal to true, time is at 4:30. We can say this. But the portfolio we want is for single portfolio. Model 25 walk forward. Walk forward portfolios. Model 25 2026. And we can say get month starts and month ends. So the top decile just isn't doing well. On average, it's doing well. Well, yeah, so what's the deal with this? This looks like the inverse of the strategy. Starts low, goes high, falls off again. But the strategy was showing the opposite. Starts high, goes low, recovers. So the return is showing the opposite. What do I make of this? Okay, so here's January. January looks good, but it starts out bad. Basically is bad the whole time until the end. Here's February. Same thing though, the long short does okay. March. Long short looks pretty good. At the end, it's bad at the beginning. And April. What did it not do? Oh. That's right, so didn't do April. So really I should scale by the spread between the top and bottom. Because here when the spread is going the wrong way, exposure should be really low. So what is this, April? I guess that was April. No, this is April. What do I make of this? The bottom decile was giving the best returns. I guess that kind of goes with Sir Night Knight's idea of flip the portfolio. So the idea was we'll look into 2024. How is the decile analysis? But now the decile analysis is fundamentally different. Okay, so yeah, let's look into that. So this is 24. Chart for 2024 looks perfectly monotonically increasing. But the realized return chart looks like a mess. I wouldn't expect this to be the case since I am predicting the forward Sharpe ratio. So I have a model which works well at predicting the forward Sharpe ratio, but not one which works well on returns. What conclusions can I draw from this? And what do I need to do in order to have something which is production ready? Okay, yeah, so I'm not going to be ready for paper trading by this morning. I'm going to have to look more into this. So that's going to be it for the stream tonight. Thanks for watching. Have a good rest of your day. Adios.